Hello. Hello today. Welcome. My name's Dave, and the topic we're going to talk about today is stocks and the stock market. More specifically, meme stocks. And, the people that are trading the meme stocks would have you believe that they're the rebels and that they're fighting the man, all this stuff. But actually, most people that are participating in the whole meme stock thing, whether they realize it or not, are actually doing something that people have been doing since the beginning of time, and that is trying to make something for nothing, trying to make a buck for doing nothing. And the manipulation that is being talked about on Reddit and other places is actually sort of actively being participated in by many of these people. It's like band together. There's pressure on anybody who's trading these not to sell. Better not sell. You're a wimp if you sell. You got to stay long. Register your shares to prevent there being liquidity in the market for people to borrow shares to short this. Let's try to prevent people from, when you try to prevent the market from having a mechanism to short the stock, which is pretty much what you're doing by registering shares, that you're actively trying to manipulate the market. And you'll also see by a lot of these people calls to the SEC. SEC, do something about this. Don't do something about the people who want this to go up, but do something about the people that want this to go down. And recently, the SEC released a video, kind of tongue-in-cheek, telling people not just to buy meme stocks because they're popular, but to do research. And I say it's tongue-in-cheek because it came in the form of a video about a game show host. And I'm going to try to play a little bit of it here, and hopefully I don't get in too much trouble by YouTube. Last time, or what was it, a few years ago, I inadvertently played about 10 seconds of a Law & Order episode on a stream. And it wasn't actually a public stream. It was a private stream that nobody was watching. But I was banned from YouTube for 90 days for that. So let's hope that doesn't happen here. But I'm going to try to play just part of this video that the SEC released. And we can take a look at it together here. So let's get that up on the right side here. Let me get out of the way.
Welcome back, Brad. It's your investment.
I'll take meme stocks. Invest.
Ouch. Your investment, Julie.
I'm going to do some research first.
Well played, Julie. Well played.
You can do research? Investing is not a game. Always do your research before making an investment decision. Learn more at investor.gov. Before you invest, investor.gov.
And of course, that video is an outrage to people, the meme stock people. That's an outrage. I can't believe that someone would actually put a video up that says maybe you should do some research before you invest. And even the way that this is portrayed by Thinkorswim, everybody wants to cater to the vote of the Reddit stock trader. So they're very careful, and they try to only publish bullish articles, it seems to me. And everyone wants to cater to this group because they know it's a new group of people that they could get clicking their videos and whatnot. Anyway, I'm not concerned on who clicks my videos. I'm more concerned with honesty here. It said, all right, so a small but vocal group of Redditors has taken umbrage at the Security and Exchange Commission's largest attempt to educate retail investors. Meme stock traders on subreddits like Wall Street Bets and Superstonk are complaining for the latest entry in the SEC's Investormania series of YouTube videos are insulting and even hypocritical. So they're complaining that these videos are insulting and hypocritical. CNBC shows one of the videos earlier this week, perhaps helping to trigger the backlash. And, I get the point. The point being that, any way that somebody, and I said this in a video a couple days ago. If you're able to make money in meme stocks, then God bless you. But buying a stock just because somebody tells you to buy it online is probably not the best idea. And it is amazing how this stock has gone up based on sentiment. And one of the best examples of that happened just about a month ago when we saw this right after earnings, which were terrible, by the way. Ryan Cohen, who is the CEO, came out and said he'd bought 100,000 shares, and the stock took off and doubled in price. That's right where I'm pointing to on the pointer here. Stock was around 77. It hit $200 just based on the fact that this guy bought 100,000 shares. Now, should you buy a stock because some other guy buys shares? Well, I guess you should in this case because it worked out if you bought it then. It went straight up. Now, this brings up another point. Just because you make a trade and it ultimately works out doesn't mean it was a wise trade, right? In this case, it worked out that because this guy bought shares, if you jumped in, you made money. However, if you look at the stock over a period of time, and I'm going to disappear once again, you can see that the stock is trending lower. And I believe this trend will continue. I think this is a bold move by the SEC to actually stand up for its principles as opposed to all these other people who are trying to just cater to the Wall Street Redditor stock group, trying to get part of those clicks from all those younger people who are buying these stocks. They basically there's so many better stocks out there to own than GameStop, and these people are going and buying this because it's cool at the moment. And I don't think this is going to end well for people. I think we will see this stock move through the $100 mark very soon again. And the company just hasn't turned around, doesn't have great prospects, continues to lose money, and there are better places out there to invest, in my humble opinion. We'll, of course, see what happens in the long run with this one. Let's go quickly to a look at the VIX term structure. As the market bottomed, it kind of appears like we may have, in not very exciting fashion, bottomed out over the last week or two. We seem to be kind of in a range right now. If we take a look quickly here at the E-minis, which could be seen as a proxy for the rest of the market. Let me get out of the way a third time here, and let's get this chart up. You can see it looks like the low here, 38.07, was reached a couple weeks ago, and we seem to be kind of sort of in a range here at the moment. We can't seem to break through this 4,200, but then again, we're not just trending down as we were. Between April and May here, we were trending lower. Now we seem to have maybe come off the lows, and maybe that was the bottom there. And it wasn't in spectacular fashion that we bounced off the bottom. There wasn't a huge capitulation event, but there isn't always. And so for me, this was a time over the last couple weeks I had nothing in the stock market, but over the last couple weeks I put money in my 401k that was on the sidelines back in the market because I feel that it's a better time than it was when the market was at all-time highs to put money in. We'll see what happens. I can't tell you what's going to happen moving forward, but we appear to be a little off the lows at this moment. Now, if we look at the term structure, that should reflect this. So let's go take a look. So I'm going to go online to VIX Central here. And indeed, if we look at the VIX term structure here, now most VIX products are made up just of the first 2 months here. And as I try to get out of this, as I try to get out of all the advertisements, most VIX products are made of these first 2 month futures, the June and the July. And you can see they are a buck and change apart. Contango currently at 5.8%. So that means that all things being equal, these products are going to decay by 5.83% 3% per month. So this is over a long period of time, a very significant factor in these moving lower. In fact, this is the driver of all these products moving lower over time, is this contango number that I'm circling here. If we do go to, say, UVXY, for example, you can see that really it's moved sideways as of late, and due to the fact that A, we haven't been in contango for a lot of this time, and B, volatility is just higher than it was before. If we plot this alongside the actual VIX, so I'm going to do is I'm going to go add study, compare with, and I'm going to pick the VIX. You're going to see that the VIX has moved higher over this period. There's the VIX there. So it has moved. It is higher than it was, say, way back here in November, December, and even in April. But VIX also off the highs right now. So I would look for UVXY to break through this all-time low of 1116 at some point in the pretty near future as contango continues to decay this lower. As far as the range right now, I probably wouldn't be super aggressive at shorting this at 13 right here. Probably I would wait for a down day to jump in if you are going to short this. As far as going long this, my same rules that always apply, which is I would not stay long this product for more than 48 hours. If you have to bet to the long side, if it doesn't work in 48 hours, I would get out, because otherwise you are exposing yourself to not only the decaying properties of contango, but just the odds are pushing against you. And we really don't want to trade stuff where the odds are against us, right? Because that just means that overall the odds are you're going to end up losing money. And why do we want to do something where the odds are we're going to end up losing money? That's like buying lottery tickets, and we don't want to buy lottery tickets. The lottery wins when we buy lottery tickets. It's like going to the casino. Going to the casino wins most of the time. So we don't want to play casino games unless it's just for our amusement. The idea of that you're just a lucky person and you're going to beat the odds all the time is not realistic. All right, so there you have it. What I have to say usually is not too popular because it goes against what other people are telling you about getting rich quick and the excitement of all that. But this is reality. We want to be smart about how we trade, and we want to give ourselves the best odds of success. And buying AMC or GameStop is not the best odds of success. There are better plays out there in the market. I don't know the future any more than you do. I wish you the best of luck trading, and I will see you in the next one. Thanks for checking me out.